Welcome to TradeTheNBA.com. This is John. This report is for the 22nd. Well, Friday's action just completed what we had been looking for, which was the S&P to fill the positive extreme that I had marked here from before, so that we could see where we expected price to move to as we were continuing to be in the soft setup of magenta under yellow below 33. At the same time, we had the crossover of DOC cyan moving towards that cross in the DOC spread. We recognized it a little early because you had this dip of steel below the negative 13.5, which is the effect of it being negative and coming above. But once it crosses back above, you got an opportunity for support. It's happening at the exact same time that we might have an MBI white crossover. Of course, we don't know yet because the day hasn't fully begun, but good indication that short-term buyers come in lifted right exactly at the positive extreme level. So narratives aside, it all fits within it. Yes, of course, we have the Biden situation, which we talked about last week, that he was going to be dropping out, and sure enough, that did it. And of course, poses the real interesting question. You're going to have a candidate for president not selected by the people. Interesting. From an NQ standpoint, obviously went a little bit deeper because the S&P, so that follow through was a little more exaggerated. The previous positive extremes really weren't relevant from a NASDAQ standpoint. Potentially you could see all the way down to 19.4 in a continued sell situation, so that's what to look for there. But it looks like there could be enough support here with steel to keep things alive. But it's still a pretty negative shakeout, and you're still below the red line. We just have this divergence between the S&P and the Nasdaq at this particular stage, and it just becomes a question of how tech relevant things get. If there's going to be slightly more selling, the uncertainty with the whole election situation. It may take some couple of days or whatever to figure things out, but there'll be their initial exuberance and then trying to figure out exactly what the probabilities are going forward and what the policy changes would be. And that has an impact. From a treasury standpoint, slight increase in yield, so it's nominal because again, you're super negative. I mean, and you look at the reality is foreign governments, China, that liquidating their treasuries. Who's buying these for a negative yield? It just doesn't make a whole lot of sense. But then again, government spending $1 trillion extra every 3 months, so it doesn't really matter. From an oil standpoint, slight decline. Again, these elevated areas are still going to be inflationary moving forward. There's no way around that. The Fed can make up whatever numbers they want, but you're going to see it in your regular purchases. From an EU standpoint, they're not going to change rates and have no real guidance, which is probably closer to the truth of anything. They really don't have a clue what to do. But hey, they're at a great level here, 109. That's fantastic given the situation within the Eurozone. That is like free money to them from an exchange. They should be subpar right now to the dollar at least. From a gold standpoint, it faded back, filled out positive extremes from foreign, did a little extra, moved back down to 50%. Still going to have additional legs going forward. It's the same with crypto. Obviously, Bitcoin shaking off a lot of that Mt. Gox excess supply, theoretical excess supply, and bouncing. But I can expect that within the halving situation and all that, Bitcoin has to move up. Otherwise, miners continue to be underwater. And that's a problem because at this particular stage, if they don't sell in order to cover their costs, you just have supply reduction. Supply reduction, obviously, limited supply, increase in price. Pretty straightforward. From an ETH standpoint, a little bit less in the relevance of what we saw from Bitcoin. But then again, Bitcoin had a little bit more of a decline. So it's just kind of reaching that parity. And this is sort of what we're seeing, a little disparity between all the different markets, not quite being in parallel. So that's got to even itself out before you can get real clarity on the strength of any kind of move. And I wouldn't expect that there's going to be congruency until that gets worked out. So we had marked positive extremes from various segment rollouts here and going all the way back to the beginning of July. And so you can see the broad scope of that big move. A lot of money created it, and then they sold it all off, shorted it, and cleared it. And then a little bit of carry through to see if there was additional supply. Looks like they're going to push right back up to where the original move started in the first place at the beginning of July. An effective net zero, but still plenty of volatility within that net zero. So, and that's in line with what our expectation was. A lot of people figured that summer things would go benign, but not in an election year. And still biased to the upside for an election year. So keep that one in mind. That doesn't mean that you aren't going to get these kinds of swings. So take advantage of what we got. When we look at it from a 5-minute chart here, it was pretty much down most of the day, and then they waited till post-market and ran it back up. And again, it's perfect. You had the massive option expiration in that, and that's sort of becoming a canard now because at the end of the day, that's where we've seen the money for the last couple of years move to, just because it becomes a clear defined win-loss setup, and they don't have that massive exposure. But at the end of the day, that's going to continue to be the narrative, simply because price-wise for certain stocks, as well as just availability options, become the easiest vehicle at this particular stage. So that's the long and the short of it for now. Actually, anything relevant will certainly put up. It's going to be interesting to see how the political side of things really starts to affect the market, because that will have an impact, because policy definitely affects profits. So stay tuned. As always, trade well. Have a good one. Look for me on the Skype chat. Anything relevant, I will put it on there.